some research on her laptop. Just then Shalabh speaks to her. Aditi told him that she was seeing some shares to invest. Shalabh wanted to know what kind of shares she is looking for. Aditi said that she was looking for some mid-cap shares. She had a price range of 200 to 300 rupees. She was hoping to get good returns on them. Shalabh asked her what's the link between the share price and share being mid-cap. For example, Procter & Gamble Health has a share price of around 4,850 rupees, but it is still a mid-cap company. So Aditi got curious about how mid-cap shares are decided. Well, basically all shares are divided into three categories as per their market cap. If a company has a market cap between 5,000 crore and 20,000 crore rupees, then it is known as mid-cap companies. Metropolis Healthcare, Castrol India and LIC Housing Finance are some examples of mid-cap firms. Similarly, if a company that has a market cap below 5,000 crore rupees, then it's called a small cap firm, and companies with a market cap above 20,000 crore rupees are known as large cap companies. On the other hand, the criteria in mutual funds is a bit different. In mutual funds, top 100 companies as per market cap are considered large cap. The next 150 companies, that is top 101 to 250, are mid-cap firms and the rest are all small caps. Investment in mid-cap is riskier than in large-cap shares. That's because mid-cap shares have higher volatility. Let's understand the reason for it. Large-cap companies are well-established companies with a good track record. They generally hold a large market share in their industry. That's why they are quite stable. Given all the reasons, these companies are able to sail through the recession unscathed. These companies are decades old and have good reputations. One more thing, good mid-cap companies have the potential to become large cap in the long run. These shares have higher growth potential as compared to large caps. Hence, investors look to invest in these companies for good returns. Now let's see what factors you should keep in mind while looking to invest in mid-cap shares. Besides good fundamentals, you should also look at a few other points while investing in mid-cap shares. Good fundamentals include promoter holding and their pledged shares, debt and cash levels, the company's industry, whether it's growth or cyclical industry. Also, make sure to look at the operating margins of the company and also its valuation ratios. So besides good fundamentals, keep in mind these points. A. Along with revenue growth, companies' profit and margins should also have a positive trend, which means the companies should grow in revenue, profit and profit margins. B. Reduction in debt and increase in free cash flows. From net operating profit after tax, if we remove investment or capital expenditure, then we will get free cash flows. And C. If it is difficult for you to analyze an individual stock, then you can invest in the share market through ETFs or mutual funds. We should keep in mind that mid-cap shares have good growth potential, specifically as compared to large caps. However, you should only invest in them if you have a high risk appetite. Mid-cap shares have higher growth potential than large cap shares. However, they also have a higher risk. So only investors that have a high risk appetite and can easily handle volatility should invest in it. And another thing is that you have to take higher risk in order to get higher returns. Mid-cap shares have higher growth potential than large cap index like Nifty. The great thing about mid-cap is that they give higher returns than large cap and they are in a better financial position than small caps. Another important point is that you should invest in the long term. Mid-cap companies are companies that are somewhere in between large MNCs and small cap firms that grow at a quick pace. However, they have higher volatility than stable large cap shares. Hence, you should stay invested in mid-cap for a long-term horizon in order to beat large cap firms. This is also visible in the data. If you don't have time or knowledge to do your own research, then you can consult an expert to pick good stocks. So overall, we can say that in order to create good portfolio, diversification is very important. Hence, mid-cap stocks should have around 30% share in your portfolio as they give a good return. However, you should keep in mind that the investment horizon should be long-term and your risk appetite should be high.